I really want to just open up your eyes to giving you some understanding on little small things that will actually benefit you as you are performing your trades throughout the week. One thing I want to talk to you guys about is RBZ. We want to look at that from a case study perspective. We want to take a look at this one because it moved about $20 last week, and we were all trading that one for the most part. And then CLWT, we're not going to do a case study on that one, but that one also moved about $5 and looked like everybody was able to get something off of those two stocks. One of them went up 200%. The other one went up, just a lot, like 300-400%. I don't know how much. I can't remember right now. And then I want to talk to you a little bit about building your watch list. So it's like a couple of different tools and techniques that you can utilize in order to, be fully prepared for whatever's coming, right? So that's what we're going to look at. And then I want to talk to you about balancing out your portfolio so that you never invest too much money in any particular stock, but you also can be prepared to gain funds if it's a strong mover. And then we're going to talk about cutting your losses quickly and what that really means, and also how many companies you want to invest in at any particular time. So that can be a mistake if you are just investing in a bunch of companies and you don't really have a plan. And then we're gonna so we're gonna cover all those things. Also, a little bit of pre-market trading and aftermarket, even though they don't necessarily reflect what's really going on in the market all the time. There's still opportunities to benefit when you are doing pre-market and aftermarket. Usually that's going to be for someone who is very busy in the mornings, will never really have the opportunity to make that trade, but understands what's going on and can take advantage of that. So for starters, you see my screen, I have pulled up RBZ, and I have it pulled up here. Let me see if I can actually pull up some news as well. See if we can pull up a little bit of news. Okay, yep, so we was able to pull up a little bit of news. Yep, and basically will give us a good, clear indication on how I picked this one out this past week. Actually, we picked it out a couple of weeks ago, and this week we just took advantage of it. So it's pretty awesome. And please don't mind I got some beeps going on in the background. People are sending me notifications. Probably our longevity team. A lot of people are interested in that. But nevertheless, let's take a look here. So as you guys can see, around let me go ahead and scroll down a little bit more. So the 14th. The 14th is when we really got interested in RBZ. This is when I first took a trade on this company, but it didn't do what I expected it to do, so I sold it and just kind of left it alone. It went through a 1-for-8 reverse split, which basically means that the company, whenever they want to dilute the price of a stock, they'll split the share price and basically make it cheaper so people can buy it. So when they did the split, the price decreased, and then when they do the reverse split, that basically means that they're going to increase the price of that share, and it gapped up to a higher price. Okay, so when it did the reverse split, I jumped in there, probably made a few dollars off of it, but it did not, take off right away. And so I think during that reverse split, it reflected that something big happened, because it probably went from $3 to $8 or something like that. So it was like, wow, this stock is really making a big move right now. But it did not continue the strong move till about another week later. So look at the 21st. You see that its news came back out, and it became a bigger. It had its real move. And so when it had this real move on the 25th, 27th, we jumped in this at about $10 and kind of scalped on it, meaning that we just took some profits from it here or there, all the way up to $38. All right, and if anybody bought in at $38, they had a bad day because it went straight back down to $21, and then it kind of went up and went down. I'm going to show you the best way to get involved with these companies without being overwhelmed when they're making these strong momentums up and their strong momentums down. All right, because as you guys saw last month, we had the one that went up to $60, and we could have done a lot of, could have done a lot with that, but we did not take full advantage of that because I was in training for one, but you guys didn't have enough money to purchase into it. So let's look. Some of you guys didn't have enough money to actually buy into it. So RBZ, as you guys can see here, last week, look at my indicator right here. It was sitting at $7. That was on the 26th. It was sitting at $7.82, and then it had its first gap up to $11.96 on the 26th. And then the next day, at about 8 a.m., it was at $10.64. Then it skyrocketed up to $18 in that one day. All right. And so once it skyrocketed, we were able to identify. Hang on one, guys. Let me invite someone else. Once it skyrocketed, we were able to notice that this is either you were able to buy into it or you missed out on that opportunity. So turned out to be a very, very good day. So I think I may have made close to $2,000 on that stock that morning, and then swung traded. I did a swing trade on it for the next day as well. But obviously, as you can see, it's died down, doesn't have as much momentum, and so it's trying to create a new support level. I don't know what it's going to do this week, but people are interested in this company, and so it's important, to keep an eye on it if you want. Now, one strategy that I use for buying into this company is stretching out the value of this company. Typically, what I want to do is I want to invest no more than $1,000 of liquid money into a company. So, for example, this company right now is sitting at $11, and so a safe amount of shares for me would be 100 shares of this company, because I only want to invest $1,000 or less. So 100 will give me a pretty decent amount of opportunity to make profit, and that's pretty much what I did when I bought into this. If it had been cheaper, I would have bought more, but because it was so expensive, I bought less. Now, I wouldn't say so expensive, but I want to make a profit whenever I'm buying into a company, and so you can't really benefit if you can only get 3, 4, 5, or 10 shares. I could have got more, but it was not the right thing to do, because you don't know which direction it's going to go. So whenever you're trying to buy some of these expensive companies we're talking about that are making these big movers, you want to already have your mind made up on how much you don't want to lose. So for example, in this particular situation, I had already calculated it was at $10, and I said, okay, I bought 50 shares initially, and then I added a few more as it began to go back down. And as it grinded back down, I added more shares because I felt like this was a powerful company, and I ended up being able to get a lot of shares in here. But because I wasn't sure what it was going to do, I sold too early up at this peak point of about $18, and then I only had about 100 shares in there, and then I grinded all the way up with it. Had I kept all the shares that I had, it would have been a very nice opportunity, but you can't really determine what's going to happen. So as you can see, the volume was pretty weak in the morning, and then it just begins to have strong candles all the way up. And so how do you get involved with this? Let's say, for example, you have $500 in your account. How much should you be spending to invest in this type of company? All right, if you have $500 in this account, you want to make sure that you're not investing more than, I would say, 10% of your portfolio in a stock at any time. So if you got $500 in that account, maybe you might be thinking, okay, I'm going to invest $50 in this particular company. 50 bucks. How many could you get? You probably could have only gotten 5 shares. But that's a safe way to trade if that's how much money you have in your account, for practice purposes especially. So because you don't want to place too much of your capital into one company, because you never know, this one might fail and there may be another one that's going to come right behind it. So in my account that I was trading out of on that day, I had $25,000 in that account. So if I practice my own principle, then I would only invest no more than $2,500 in this particular trade. And that's pretty much what I did, but I actually started off with even less. So I only invested $1,000 and bought 50 shares, somewhere around there. I invested 1,000. Yeah, I bought 50 shares, so that would have been about $500 that I invested initially. I ended up buying more into it, and that's kind of how you want to go. You don't want to be placing too much of your money in one company, because even though this had an awesome move, the next one is not going to have the same type of momentum that this one did. So you want to be smart. So I jumped into this with only 50 shares at first, and then I made profit, waited for it to drop, and I bought another 50 to make it 100, which would have put me right at $1,000 in value, and then it went lower, and so I was willing to go ahead and commit that entire $2,500 to this stock, and then it took off, and I closed it out at I closed it out at nearly $2,000 profit, so almost 100% return on that trade. Okay, so very good, very, very, very good trade. And like I said, anybody that bought in late, they made a mistake. So this is kind of how you want to approach these more expensive stocks that you're going to be trading. As you are investing in some of these more expensive companies, you're going to want to make sure that you're not overextending yourself or doing anything dangerous in your account. That's how you lose your money. You'll never be able to build a strong platform doing it that way. All right. So that's a secret way on how to invest in these companies. Maybe look at using 10% and riding it for a little bit and then closing it out. Don't put too much, because there's going to be other opportunities. So like I said, this company did well, and as I looked, I noticed that in the morning previous, it liked the $10 range. So anywhere around there, I knew was pretty decent. This is where I got into it. I was in there for the initial pop-up, and then it went back down, and it never came back to this support level. This support level shows me, and as you can see over here, this support level here matches up with the support level that's here today. This is where it currently is. If it drops below $10, it lets me know that this is no longer a good trade and that it's time to get out of it, because it's going back to another support level at $7. But as long as it stays above this level, it has the capability of going to a new resistance level. The next resistance level will be right here at $18. And if it passes up $18, the next resistance level is going to be all the way up here at $38. So I'm watching this one. I still have a small swing trade in it, and just if it performs next week, then it'll be a good move. And so this is why I was comfortable getting in at the $10 range, because obviously it bounced up, came back down, and then it took off again. It did not want to go back to the $10 range. It was comfortable being here. And so at any point here, you would have been safe to trade this company at around $10 to $12. It would have been good. Yeah, you would have had a lot of volatility. It would have dropped a little bit, but it never went back down to 10. But it would have been kind of nerve-wracking to see the grind all the way up. But it was awesome. It was a pretty good day. All right. So we'll be looking for this company next week as well, to see what it might do. Hopefully it has some level of performance. So that's the little case study on RBZ. Does anybody have any questions on this particular one?
Pastor Griffith, this is Tony. Hopefully I'm not taking everybody too far back. This is my first time on Basic here.
Yeah, go ahead.
How do you know RBZ was the one? Like, like from scratch, what made you say RBZ?
Very good question. Very good question. And the reason why I knew that RBZ was the one was because I previously traded this company and it had already shown performance. So as you can see right here on my screen, this is a list of all of my watch list stocks. So I go in, these are previous companies that have performed, and I don't, not only this watch list, but I also have another watch list that I have a whole lot more that I'm watching. And as you guys can see, this 80XS right here is gapped up 1,400%. Now somebody might be like, wow, why didn't we trade this one? But the reality of it is it's going through a reverse split. So it's not a true indicator of what's really going on with this company. So that's not a real adequate answer that this company is really moving. So we're not going to trade something that's not having that move. So same thing with RBZ. I'm identifying, it pops up on my watch list. I'm looking at it and I'm thinking, let me go do my research. And then based upon that research from the previous week, I knew that it had already gone through its reverse split. And therefore, I knew that if it goes above that resistance level, because it was stuck here at $7, if it goes above this level, I know that this is a real strong mover today because it's no longer being resisted by $7 or $8, but it's at 10 and 11. So I'm waiting for an opportunity for it to draw back for a minute, and then I'm going to buy into it and then be willing to buy more. I'm not going to give the market what it's asking for initially. I'm not going to buy all of my shares at one pop because I want to make sure I got enough money to buy more if it goes down on me or if it chooses to take another route. And that's exactly what it did. So when I first bought it, and you guys have to be aware of this as well, that when you first buy into a company, the market feels whenever somebody buys into a company, and they will try to go the opposite direction, especially if you buy a reasonable amount of shares. And so that's what I did. And then when it went down, I bought more, and then all of a sudden it grinded up. So that's how I discovered RBZ. It popped up on my scans here, and it popped up on my watch list. And but in the morning, I comb through, in the night prior, quite often, I comb through, dozens of companies to see, and I read and I research what's going on with these companies. And as I'm doing my research, I identify this one has potential, and I look at the previous the cost of it, and I also look at the highest that it has ever been. And so when you can identify that, and as you guys can see, this was at $38. If we do let me show you this chart right quick. I'm going to show you a 1-year chart. If you look at a 1-year chart, you'll see back in 2017, where was the high point? Also at $39. So I knew that this has the potential. Now it grinded down through splits and through loss, but it loves to be around this level, 10 to 12 bucks. For some point in time, it dropped to 7, but that is a very small amount of time that it dropped to 7 over the years that this company has been working. So when I look at this and I know that it has these indications, and I know that it has this support level, and I was there at this support level when I initially bought into it, and it also has this support level, then I know that it has the capability of getting back to this level. So all that goes into technical analysis, and I take a look at all those things when I see something on my watch list having some type of momentum going. Does that make sense? Did that answer your question, Tony?
It did. I'm missing some stuff, but I just got to read some of the basics.
Absolutely. Well, this watch list, so my watch list that I have here, any one of these are prior performers. As I'm scrolling down, you looking at these?
I see it.
All right, so any one of these are prior performers. In the stock market, as a day trader, you are going to have, I'm going to show you the live news heads as well. You are going to have any one of these wake up at any given time because they always move in a cycle like the stars. They have an orbit. They're on a time clock basically. And if you can identify any one of these as a mover, or if you see them gapping up this market change or this change in percentage, then I know, hey, something's going on. Let me go to the news and see. This is my news section here. I go to my news section. I start reading to see what's going on. Now, another thing that you can do, I'm going to just clear this off right quick. As you guys can see right here, this is live news. So anything going on in the market, I'm able to go here to look at what in the world is going on in the market today. Now, the market is closed, but as you can see, there's live news popping up right now. What is this? Tim Sloan, 100%. He's the chairman of Wells Fargo. Warren Buffett gave him an endorsement just before he retired. So there's something probably going to happen with Wells Fargo this week. So it'll probably be a decrease in their stock. So if I'm a short seller, meaning that I make money on when a stock goes down, then I may go ahead and buy some of Wells Fargo and short it, because I expect that because they have some drama going on in their company, I can make a profit. But I'm not just going to do that. I'm going to look at it. I'm going to look at the news. I'm going to look at its chart, and I'm going to take a look at all those things. If you look here, Pope reaches out to Muslims, champions migrant in Morocco. High test scores earn them seats. Tough questions whether accepted. So anyways, I combed through all these companies, and you can take a look. White House proclaims April 2019 as second chance month. So they have all these news articles that pop up, and I look for indicators, and I look for, it requires a lot of reading. I look for indicators. I look for news companies that come up live, and I can identify, hey, let me go pull this up and see what's really going on. And then I'll add them to my watch list. Once I add them to my watch list, if they start gapping up at any percent, then I'm going to know something's going on. So if you can see right here, I got this one at 14%. This one's at 17%, 15, 10, 9, 4, 7, 6. As I'm looking at these, I'm wondering, what are these companies doing? And it goes all the way down to 0, 0, 0. It's not gapping up at all. But when one of my watch list indicators pops up, I'm looking at it. I'm saying, okay, why is ADXS gapping up 1,400%? Let me go find out. ADXS, let me take a look, see what it's doing. I got all the news I would want to read about this company. I can look at its profile, but let me go to the latest. I know that Advaxis is dropping 5% after revising exercise price of warrants following recent 1-for-15 reverse stock split. So I know that this is not a true move. Now, next week or the week after, this company may have a true move. But this 1,400% is only because they did a 1-for-15 reverse split. So that means that this company probably was worth a very little amount of money. But let me just show you how that works too. I'll pull it up on my chart, and I'll show you how much it was worth. So this company was worth 64 cents. But because they did a reverse split, now today is worth $5.92. And that's just the way that the investors change the stock price. They're going to raise the price of that stock, or they reduce the number of outstanding shares that they allow the market to have. And so when they do that, when they reduce the amount of shares, now what happens is the company's value, or the stock share value, increases. So am I going to buy this stock because it's up 1,400%? Nope, I'm not. The reason why I'm not going to buy this company is because it's not a true move. It did not really go from 64 cents, and people around the world pushed it up. As you can see, there is no grinding, lots of very little volume here, and then all of a sudden, boom, it jumps all the way up here to 5.94 on Thursday. So I'm not going to trade that. Now, after the reverse stock split is gone and is done, I still have it on my watch list here. You see ADXS. If after the market clears, and you know, everybody knows that its value is $5 and it's back to 0. If I see this gapping up 25, 30, 40%, then I'm going to get interested in it, because I know it has nothing to do with the reverse stock split, but this is actually people are pushing this price around the world. Then I'm going to tell you guys, hey, look at ADXS, because it's having a move. We need to get involved, or at least be watching it, be willing to put a little bit of money into this company. Does that make sense on how I do that?
Yeah, that definitely makes sense.
All right. Good deal. Okay, so that's how I build my watch list. And I've been building my watch list for about 3 years. So I got companies that I'm looking at that you guys never seen. It's new to you, but it's not new to me. So whenever I see them moving, it'll pop up here, Shane, telling me, hey, this is up 20%. Jimmy's going to say, why? And I'm going to go research it. And then I also look at these headlines. And so that's how I start getting those indications. Hope that makes sense.
Yeah, bro. I'm sorry. Can you step back for 1 second? You said that's how you make your watch list. Where do these come from? These stocks. Are they just in the news? They pop up over your.
Yeah. So I'm looking at things that are performing in this news headline quite often through my research, just like you do, Matt. And as these pop up, like you see, ADXS is on my watch list now. You see that right here?
Absolutely.
Okay, I'm not gonna trade it right now, but hey, I'm gonna keep it up there so that if it does do something in the future, I'm going to be one of the first people in the world to know about it. And so I separate the watch list up. So now, if it goes up 25%, that 1,400% is not always going to be there. It's going to probably drop down to negative 20% or something. But when it shows back up on my screen, it'll be up one of my top ones up here, and it'll let me know, hey, something is going on with this company. Watch out. And if it's good enough after I go do my technical analysis and my research, then and only then will I make a recommendation to you guys to keep an eye on it. And it's got to be really good for me to say, set your target price. This is where you want to get in. And your target price is going to be based upon, like for this one, I'm not going to give you a target price because I don't even know what it is, because it jumped from 64 cents all the way to 5.92. And so I'm going to wait and see it build up early morning, 4 a.m., 5 a.m., 6 a.m. I'm going to allow it to see it where it's building up. Where is that new support level? Where is that new resistance level? Then I would say, hey, this company is good. Look at this target price. Let's get ready for it. Make sense?
Yeah, it does.
All right.
Hey, Pastor, what do you consider, quote, performing? Like, what's that percentage where you want to put something like Washington and say, hey, this is performing? 5, 10, 20?
Yeah, so take a look. It doesn't really matter to me. I got some that are at 0%. You see? If something comes across and I'm really interested in it, I'll just add it. Because it may be up 50% today, but it may be down 100% tomorrow. You don't know. And so I keep a lot of them on watch. I keep a lot of them on watch, and I just wait for them to perform. Like Seal, for example. Seal was a stock that I traded last week. It didn't perform as well, but pre-market I was up, $200-300 on this company. Closed out a trade, I believe, or two, and now look at it. Its percentage is at 0, or it's it's at 17% as far as the real percentage change, but it went back down to 0%. So I'll look for it to get back above that level. So it doesn't really matter, but I will probably make my trade on it if when I look at it, it's up above 50%, and I look at the news and it has real news letting me know that somebody is really interested in this company. Now, another company that I'm looking at in the future is BIOS. This one has real news. Take a look. I'll go down here, 321. This one's going to do something. As you can see, the Director Officer of Compensation filed an 8K. That means that they're going to do some move with this company so that people can buy shares. I don't know what that 8K is going to be, but on the 21st, they did that. And so let's take a look. BioScript filed a Form 8K, Director, Officer, or Compensation filing with the U.S. Securities. On March 18th, Jody Kepler provided notice to BioScript Incorporated that she will be stepping down as Senior Vice President, Chief Compliance Officer, and Privacy Officer of BioScript Incorporated to become Regulatory Counsel of healthcare company not in the infusion service field. Ms. Kepler is expected to remain in her position until April 12th, 2019. So they're filing an 8K. Those 8Ks are usually for new shareholders or new positions, things like that. But that's true news. And look at all this. March 18th. Barrington Research cuts BioScript PT to $4 from $4.50. Maintains outperform rating. So what's the cost of this thing right now? The cost of it right now is $2. But analysts are saying that the cost of this really should be $4.50. Okay, and so if the analysts are saying that, then when I see the morning when it gaps up, then I'm going to make sure that I have my swing trade in place. And I may also even have this one right now in my, I may have a small position if I didn't sell it on Friday. Let me double check. Yeah, I sold it on Friday because it didn't perform like I wanted it to. But on Monday morning, if I see it up 25-30%, that lets me know that what they have been talking about today, they're actually doing it. Does that make sense?
Yes, it does.
So that's how that works. And these are great questions, by the way. So no problem answering any of these questions. So let's see here. All right. Anybody else with any questions or any thoughts regarding anything right now?
All right, one more. Tony again. So you're using the term real news and not a lot. What's the news that's not real that would fool you that you got to look out for?
So very good question. So like, for example, if you go here, if I look at my watch list and I'm paying attention to ADXS, if I'm an immature trader and I don't know what's going on, I'm going to say, oh my goodness, this is a good trade. This is awesome. And I'm being fooled because in reality, when I go to ADXS, if I'm doing my due diligence and I'm researching, I'll find out that this is not true. It's a 1 for 15 reverse split. That means that lets me know right there that I'm going to lose my money because that's not a true move. Nobody in the world is really investing in this. They just change the price. And so that's how people, that's one way you can have the wrong news. Other ways is sometimes people will look at a stock and they will say, wow, ADXS was a part of a meeting that took place. And who cares if ADXS was a part of a meeting? That doesn't do anything. You know what I mean? And so just things like that. You have to look and be able to identify if this is good news, true news, if it's good and if it's relevant. If it's good and relevant, like they just got a patent, fulfilled, or they just made a deal, or somebody just offered them millions of dollars, I know that my money should be decently safe, especially if other people around the world are going to buy into this company as well with me. Does that make sense?
Yes, makes sense.
Awesome. All right, so let's see here. Balancing your trades, how I do. Okay, so I just talked to you guys about how to balance your trades out. If you got an expensive stock, make a limit. Find out what your limit is going to be for that day. Find out what your limit is going to be. And do that equally across the board. So typically, you don't want to invest in more than 3 companies at a time. Simply because, number one, you're going to, if you don't have $25,000 in that account, you're going to mess up all your day trades if they all go in the opposite direction of where you want them to go. So you want to keep it to 2, 3. Just take a look. Okay, this is a good one. Maybe a good opportunity. Something that you can close out unless you're getting in at a swing trade price, which is the lowest you want to get in, so that you can hold it overnight and not be bothered by it. The other option that you can do is you can buy at 3 o'clock, find out what's beginning to gap up, look for it, and get that stock, and then wait for it for the next morning so you can sell it. That way you won't have to mess up any of your day trades. That's swing trading overnight. Now that can be tricky because sometimes people know that's what you're trying to do, and so they'll gap up a stock and you'll buy it that evening, and then the next morning it'll be lower. But if you know that it's a true move, you get it, and then you sell it the next day, you'll never have to worry about day trades. Now, the other thing that I wanted to mention to you guys is that when you're losing in a company, because you will, everybody does, you have to know when to just cut your loss. Cut those bad boys quickly. That is the best way to preserve your account. So you're protecting your account by, one, making sure you don't overinvest in any company. Don't overinvest in any stock. All right. And the second way you're doing it is by, when you get to that point, your max loss for that day, cut it. Make your mind up. I am not going to let this company continue to go down. And a lot of people have trouble with this, like RBZ, for example. If that company goes up to $30 and you are the latest person getting in there at 28 and it starts going down on you, if you buy 100 shares and you just sit there and watch it go down $10, you just lost $1,000. But if you have your max loss, I know what my maximum loss is for the day, and you say, I'm only going to lose $100, that's it, or however much it is for you. Some people it might be 10. Then you close it out and you be done with it. Just be like, I'm done. Because you're going to wait. There's another one that's going to come, and then you're going to be able to take advantage of that without losing your profits and without losing your money as well. So now the reason why I teach you guys to trade the cheaper small cap stocks below $5 is because if you get it below $5, the maximum you could ever lose is $5 per share. And so typically I'm giving you those that cost $2. We have seen some awesome moves. Stocks going from $2 up to $20. And if you buy in early enough, the lowest you can go is $2. So I usually buy 1,000 shares if I'm getting into a company that's below $2 or $2 or below, because I know the maximum I can lose is $2 or $2,000. And I'm not worried about that because I know that I may lose $2,000, but I have the capability of gaining, $20,000 or $10,000 because I'm so low to the ground. But I'm not going to sit there and lose $2,000. If it starts showing me that it's not going to perform, then I will close it out and maybe reduce my share size. And so, and then, see what's going to happen with it. So learn how to make sure you know how to cut your losses quickly. Make sure you know how to sell as soon as possible, because sometimes things won't go the way that it's supposed to go. And if you're prepared with that and you're buying cheaply, you'll never have a problem protecting your funds. All right. Now, the last thing I want to talk to you guys about today was pre-market prep. So every day what I do when I'm getting up in the morning, I get up and I come down and I'm looking and I'm researching exactly what I was just showing you guys a few minutes ago. I'm researching and looking for indicators and looking to see the highest performing things and reading the live headlines, checking on what's going on in the markets. And once I kind of figure out what I'm looking at, it's important to be able to go through your checklist of things in your mind. What don't I want to fail at today? I don't want to oversize my buy. I don't want to buy too many shares. I don't want to hold on to something too long today. I don't want to, buy into too many companies today. I'm going to make sure that I go ahead and set my stop losses quickly. I'm going to make sure that I'm not hasty because it might not be the move that I'm looking for. So having a rhythm of things that you're thinking about before you even make that first trade is going to give you a lot of great success because you're thinking about what you're doing before you actually start doing it. That is huge in this company. That is huge in investing, being able to do that. So I normally do mine with prayer. I normally do mine with my meditation. Every morning I listen to some preacher, or I'll have a prayer, and I'm just getting my thoughts right, allowing myself to get emotionally and mentally prepped before I go into the market and start making foolish decisions. Now, because I only trade certain types of stocks anyways, it's already built into me not to make those silly mistakes. So I don't trade stocks that are very expensive unless it's really, really important. It's just not worth it. It's just not worth it. It's not worth the time, the energy, the stress, or the amount that you can lose. It's just not worth it. And so, for example, let's say if I did want to trade a $50 stock. If I want to trade a $50 stock, okay, and I know that I only want to lose $1,000, I need to be able to calculate how I can only lose $1,000. So the best way to do that is to multiply 50 shares times whatever equals 1,000. What is 50? So 50 times 2 will give me 100. All right. So 50 times 20 will give me 1,000. Right. So I don't like public math, as you can see. So I know that if I'm buying a $50 share, I'm going to get 20 shares. And if I lose everything, the max I will lose is $1,000. Because if it goes from 50 all the way to 0, I lost $1,000. That's how I calculate how not to lose more than $1,000. Now yours might be a little bit different. You may be saying, how do I make sure that I don't lose more than $100? Same process. If it's $50, I know 50 times 2 is 100. So I can only get 2 shares. That means I'm going to buy these 2 shares and watch it go all the way down to 0. That means I lost $100 if I let it go down, and then you would be kind of silly to do that. But I'm just saying, I'm just giving you like this random example. But if you have a confidence that this company is going to shoot for the moon, then okay, I can buy 2 shares and just wait on it, because maybe it's going to skyrocket like Apple did back in the early 90s when it went from $1.73. Now it's at $2,000 basically. So okay, that may be a good idea to practice. All right, you can do that for long-term investment strategies as well. So, but being able to identify what your maximum loss is important. My maximum loss is $1,000. I don't want to lose more than $1,000 on my trade. All right, and if I do, then that means I did something wrong. I broke my rules. I didn't do right. Because if you're gonna make big money, you have to be willing to take your positions seriously. So what I'll do is, instead of buying 20 shares at $50, I'd rather buy 1,000 shares at $2. So if it goes down to $1, I lose $1,000. But if it goes up to 10, I made $8,000 if I leave it alone. All right. But typically the market doesn't work with you that easily. And so you have to be able to cut your losses quickly and also take your profits quickly when you have those types of moves. All right. So I know that this is a lot of information, but you can watch this video again later on as well. It'll kind of give you a little bit more insight on how to do it. Let me see if I had any other thoughts that I wanted to share with you regarding this. So that pre-market prep is very important. Now you can also trade pre-market. So I trade pre-market and aftermarket and during the market, and you can do it as well. I do my pre-market trading out of Merrill Edge. And I do my pre-market trading out of what you're looking at right here, Thinkorswim, using the mobile application. And so you can do the same thing. And I do it because when I get to work, I'm getting busy. And, sometimes it's not conducive for me to, execute a trade or close one out when the market is actually moving. I may be in a meeting. I may be en route somewhere. I may be sitting down trying to figure out some work or do something else. And so if I can get a lot of my trading done before the market opens completely and make some profit there, then I'll take advantage of that. A lot of executives do that as well. So Tony, you might want to do that as well. Consider that, because I know you're busy leading your folks, and Matt as well. I know you're busy in the pharmaceutical stuff, and a lot of you other folks as well who are busy throughout the day. It may be something to think about or consider, but you got to remember, you don't get free trading when you're trading pre-market. And then you normally have to spend a little money to open up a broker account and fund that bad boy with about $500 to $1,000 to be able to do that. So it's up to you if you want to do it. Now, the good thing about Robinhood is they will let you start trading at 9 o'clock in the morning. So you still get that 30-minute window before everybody else gets in there to get that position. Whenever we have something good coming up. So that's always a benefit. All right. And then also with Thinkorswim, I can trade even after hours up to 8 p.m. Eastern time. And yes, I can make money doing that as well. But like I said, the bulk of the people who are trading, they leave. And so any money that you would think that you're going to make is typically not going to happen unless an investor is actually pushing his own stock up, or some investors are buying into somebody else's company. So that's how that works. Any questions? Anybody else with any thoughts or any questions? Is this helping you? I hope it's helping you.
Yeah, this is very helpful. I do have one question, kind of going back to the comment you had made about holding on to a stock for too long.
Right.
So let's say it's a stock that's not really doing too much movement, but it's a very low price and you're not really missing out anything. But again, it's not really moving. How long do you typically hold on to a stock in that scenario?
It depends on the value and the worth of it. Like if you really believe it's going to do something, because some stocks will stay low for years and they won't do anything. You're just like holding it for no reason. That's capital you can use somewhere else. But if you think over the next 3 months, and you want to be that long-term trader, you just got to make sure you get in low enough at that price, or you can average it out low enough at that price so that you are comfortable holding it. So I'll tell you a critical mistake I made one year. One year I held on to a company, Top Ships, TOPS, and I held it for like 3, 4, 5 months, and all it did was just continue to go down and down. And do you know what else it did? When it went down, it performed a reverse split. So I held on it to it. I bought it at $2, $3. It went all the way down to 19. It went all the way down to like 38 cents. And then it did a reverse split. And so when it does a reverse split, the value of that stock turned into $3 again. And when it turned into $3, I did not profit because my value still was at 38 cents. It started going down again, all the way down. And so what it did was it took the first level of money, and then it did a reverse split, and then it took the second layer of money. And so that's why I say, unless you really believe it's going to have a performance and it's a good quality company, you don't want to keep holding on to it. But if you buy it at $1, you don't really have much to worry about. So those ones that I give you that are $1 or $1.50, as long as you got a decent position, you don't really have to think about those, because the worst that they can do is go down to $1. And if they do, their company is going to be delisted from NASDAQ or Dow Jones. It's going to be delisted. So they're no longer going to be able to be advertised, and therefore their company stock is going to fail. So if they're willing to take your little $100 to go below $1, then they're crazy. So that's why I tell you, those you don't really have too much to worry about.
Okay. Now, what about those ones that are kind of the newer ones, new companies that are coming up and just presenting themselves to the stock market?
Those that are doing IPOs. So
yes.
If a company's coming out doing an IPO, like for example, Lyft is going to be coming out pretty soon, and they're going to be having their IPO. When they do their IPO, their stock is going to go up, no doubt. I mean, it may even come out on top. But when companies do IPOs, you got to be ready to sell. Because when it does that when it gaps up really strongly and it comes back, what's going to happen is it's going to drop, and then the real investors will get in. Everybody will pump it up at first, but after that it will drop. The same thing that happened with Snapchat. When Snapchat opened up, it gapped up. As soon as it opened up, $28, and then it went up for a while, and then bam, it went straight down. Let me just show you, for example, how that works. Great question, Matt. So this is Snapchat right now. The value is at $14.12. If we take a look at the 1-year chart, let's see here. Where's the 1 year? Oh, okay. Let's see here. What month is this? This is 2018. Yeah, this is when it first came out, actually, in fact. So let's take a look. So when it first came out, it's not really showing you the complete. It was at $28, but as you see, it went up it stayed at about $15 from April 3rd till April 23rd, and then boom, by May 4th, it was down $10, grinded back up, and then boom, another continual decline, because this company's value was really not ever at $18. It went down to $4 and then up to $11. So when a company has an IPO, you want to make sure that you're ready to sell. Yes, there will be a spike initially, but then there's going to be a drastic drop, typically.
That makes sense. That sounds similar. I was following the stock Drop Car, and you heard of that one?
Negative.
Okay, it had a high entry when it first, like a couple years ago, and it dropped dramatically. But then it's starting to grind up, but it's still below where it was before.
Yeah, because true investors are not going to waste their time. Momentum traders, I should say. True investors are people who actually really do believe in the company, and they're the ones who keep it from going below a certain level. Obviously, you see this is the support level at $5. So if Snapchat drops below $5 or gets around this area, I may buy some stuff for a long term, because I see that true support is at 452, or around this 482 frame. This is where the true investors live. These are people who actually believe in the company. This right here, maybe not so much. This right here, definitely not so much.
So even though that's it looks like a small little percentage, like where that moment where it was at that true point, even if it's there, like it's not really forming a line, that's the true point.
Well,
so it's not like
this is true. If you look right here, this is from October of 2018. This is January of 2019. So that's about a good 5-6 month window of indications. Then it hit this really low point. The low point tells me that now the average, the support level is probably really about $6, but this 489 is what lets me know it will not go below this point, because true investors are holding it up. This is where it really resides. This is the lowest point this has ever gone to. If it ever gets below this point, it lets me know that people don't like this company at all, and now it's going to fail completely. Does that make sense?
That definitely makes sense, and that helps out too for those swing trades.
Absolutely. And that's what I tell you guys for swing trades. I'm always looking for that low point to tell you a comfortable spot that you might be able to hold on to it for a longer period of time. All right. And anyone else?
Got two questions, Pastor Tony. So the first one is, you mentioned a strategy earlier that some investors use where they make money on a decrease. And if it's typical for a new company to join the market, I don't even know what IPO mean, I'll figure it out later. Yeah. But a new company to join the market, and then there's going to be a high and then a dip. If that is typical, that happens every time. Is that an opportunity where you should use that strategy when you know something new comes on board, because you know this thing is going to happen that you're showing?
Yeah, typically, but you can also lose money if investors start buying up the company stock. So if a company, like if you want to be a short seller, and every now and then I'll do some short sales. If you want to be a short seller, then you just need to make sure that the value of that company is really going to go down. Like, for example, if somebody bought in right here at $13.59 and shorted it, that's good, because now it went all the way down. I'm making all that profit as it goes down. But if somebody bought here as a short seller and it went down here and they waited and said, okay, I'm going to see if it keeps going down. Now all of a sudden, or somebody shorted it right here thinking that it's going to go down. Now all of a sudden it rose up. All this money they lost because it went back up.
Gotcha. Second question, for somebody who's just starting out like me, is there either a video or a book you recommend? Like, you threw out a lot of terms related to the technical analysis, prior performance, support level, gapped up, split, first split, resistance level, all that stuff. Like, I don't know what any of that is. So how can I start so that I can have that basic foundation?
All right, so a good foundation really and truly is a stock. It's gonna sound funny, but Stock Market for Dummies. You can read that book, and it will identify all these basic terms, and then also what is the name of it? Investopedia. You can go online if you don't want to buy a book. You can go to Investopedia, and it will give you all those types of terms and all those types of details. But primarily, as long as you know how to buy and you know how to sell, 90% of everything that you need, 95% is provided to you in the morning when we talk. But to get yourself more spun up on knowledge and wisdom just about the market itself, I would definitely start right there with that book.
Thank you.
Absolutely.
Also, brother, you do have some terms and things on your website. some of the coursework you go through?
Yeah.
You do go through some of those terms as well.
Yeah, and so in the videos, the playlist, you can check out, and I know you're watching some of the videos in the playlist right now, but we talk about a lot of those things as well. But if you want to just have a good foundation, it's that book, those books will help you as well. But a lot of times people have books and they don't really do anything. They don't really get you to profit. They just selling books. The bottom line is understanding how what I'm describing to you today. That's the bottom line. That's how you get to profit.
Makes sense. I appreciate it, brother.
Absolutely, absolutely. All right.
I had a question.
All right, go ahead.
When you were talking about losing money on a stock, like say you invested $1 and then you lose your money. Do you lose your money because that stock went down?
Yes.
Okay. Then how do you hold on to one? You got to put more than what it's worth in there? How do you say, okay, I'm going to hold on to it?
Well, that's called realized and unrealized gains. So just because a stock goes down does not mean that you're going to lose your money. It can go down, but it doesn't. You don't lose your money until you actually close out that trade, until you realize those losses. So, so once you close it, then that's when you actually lost the money.
Okay, so you can be at $0, but you can't stay in there with $0 in that stock, though.
Yeah, it won't say $0. It'll just show that you're negative and you can continue to lose. So if it goes down to, the only way you can actually lose all of your money is if it goes all the way down to 0 and then it does a reverse split on you. Then they will have to cancel you out. But you can't really lose all of your money because it depends on how much you actually have in the account. The only way you can do that is if you have to have money borrowed on margin. If you have money borrowed on margin, then you can lose money that you'd be owing the bank, but that's not what we teach over here anyway. So,
okay. I was just confused about that $0 thing.
Got
I don't know if you talked about it, but now I got to understand what you said. The only way to get to 0 is if it drops all the way down to 0.
Right, and then it has to do a reverse split. So. And
a reverse split is not good, right?
It doesn't usually happen. People don't usually do that. It happens every now and then, but you can make money off reverse splits as well. But you just got to be watching it, being mindful of it.
Okay.
All right, great question though. Anyone else?
Yes, Pastor. Can you explain what reverse split means?
Now, Juliet, you should know what a reverse split is. I've been telling you about this.
I know. I'm looking through my notes, Pastor.
Good.
I have here what shorting the stock means when people buy into the company only to bring the price lower. So I found that one, and I'm sitting here going through my notes trying to find it, and I can't find where I wrote it down.
All right, that's fine. So a reverse split in a nutshell is when a company change it. So a split, let's say for example, I have a stock and my stock costs $10. If that's too expensive for people, as a company owner, I want more investors. So what I'll do is I'm going to split my stock shares up. So instead of making it $10, if I have 100,000 shares that I can offer to people, and I want to be able to offer 100,000 shares, a million shares, then I'm going to split my stock. The value for one of my stocks is now the value for one of my stocks, instead of it being $10, I'm going to make it $1 so that I'll have 1 million shares that a lot of people can buy into. Okay. And so when my stock has been split to $1, if I'm tired of it being at $1 or it's been failing or nobody is still buying my stock, then I'm going to say, I don't want my stock to be $1 anymore. My company's worth more than that. So I'm going to do a reverse split. So I'm going to take my shares, instead of having 1 million shares out there in the market, I'm only going to have 100,000 shares in the market. And so it automatically changes from $1 to now $10. So I did a reverse split of a 1 for 10 reverse split. Does that make sense?
it does, but I don't understand it still. But I understand what you're saying when you were saying how you reverse it and it changed it from 1 to 10.
Yeah.
I just don't understand how. Like you're selling half of your stocks, or
No. It's just the company's way of changing the value. That doesn't mean it doesn't, like, normally a stock will go up when people around the world buy into it, right?
Yeah. Yes.
But
I know.
But in this case, the value of the company, the stock is changing just because somebody filed a paperwork saying our company is no longer offering out 1 million shares. We're only offering out 100, and the value of it is $10. So it's just paperwork.
Got it. Okay. Now I got it.
All right, good.
So what happens is you lose money on that stock depending on how much they split it.
No, you don't lose any money. It's the same value. You just get less shares. So, for example, you may have 1,000 shares, and if they do a 1-for-10 split, now you only have 100 shares.
Oh, I see. Thank you.
You're welcome. All right. Okay, well, I hope that this was beneficial to you guys, and that you really are learning, and that you're preparing yourself and getting to that next level, and that this is value added to you, and that you can understand what we're talking about. If you have any questions, you can always reach out to me, send me those questions, and we will help to get you where you need to go. We want you guys to have great success and know what you're doing and how to do it. That's my desire. And I'm glad that we got some new folks with us, and we have a lot of people that are not on the call with us right now, or on this video right now, but they're out there, so they'll be watching this later on. So I'm very grateful.